Question number 3, Alfred Ngaro.
Thank you, Mr. Speaker. To the Minister of Finance, what reports has he received on the outlook for the world economy and what are the consequences for the New Zealand economy?
The Honourable Bill English.
Mr. Speaker, the IMF and World Bank meetings in Peru affirmed that slowing growth in China and other emerging economies like Brazil is a risk for the world economic outlook. There are also a number of positives, including improving growth in the US and the UK. The IMF projects global economic growth in 2015 will be 3.1, a bit weaker than they thought just 6 months ago. This weaker world growth highlights the importance of continuing to expand our international connections, particularly through trade agreements such as the TPP. The more markets our exports have access to, the more resilient they will be if any particular market runs into economic headwinds.
Supplementary question, Alfred Ngaro.
How is the global decline in commodity prices affecting the New Zealand economy?
The Honourable Bill English.
Well, Mr. Speaker, there has generally been a decline in commodity prices across most global economies, and of course in New Zealand the impact was through the dairy price. From a high in February 2014, dairy prices fell 65% to their low in early August. Since August, dairy prices have regained around a third of those falls. It's too early to know if those increases are permanent, but it is pleasing to see some stabilisation. The effect of that has been cushioned by a significant reduction in the exchange rate, which is down more than 25% against the US dollar since mid-2014, and similar adjustments are occurring in other commodity-type economies, such as Australia.
Supplementary question, Alfred Ngaro.
What was the IMF's view about growth prospects for New Zealand?
The Honourable Bill English.
Mr. Speaker, the IMF's latest set of forecasts were released earlier this month, and they had the New Zealand economy growing at 2 to 2.5%. The early half of calendar year 2015 now shows fairly soft growth, and it's possible that growth could drop below 2% for the calendar year 2015. That is certainly slower than the 3% Treasury were forecasting last year, but in the context of slowing growth around the world, it is moderate, sustained growth that will continue to deliver more jobs and higher wages for New Zealanders.
Question number 4, Andrew Little.